The Magnificent Seven stocks. Are there opportunities? Are there things to avoid? I'm going to walk you through my analysis of each of the seven, both for the short term and the longer term. We'll look at different charts. I will apply my simple methods for analyzing stocks, and in doing so, teach you some simple things that you can do in your own portfolios, whether you're a short-term trader or a long-term investor. Let's dive right in. We'll start with Apple, and here we see the daily chart of Apple, and there's a few things we want to highlight. First is that there are rising bottoms on this chart. That means the buyers are in control. There is resistance here, which limits the upside. So we have an upward move, we hit resistance, pulled back. Upward move, hit resistance, pulled back. And now notice that every time there's a pullback, it's not as intense as the previous one. That's why we can say there's optimism building. So I like the Apple chart. I think ultimately it needs to break through this 235 level. And if it does that, then I think there's a good long-term buy opportunity. If you are already in Apple, it's a good hold. The optimism is there. Let's dive into the short-term chart just to get that more trader-focused outlook. This is the 60-minute, 30-day chart. And the limitation here is resistance. You can see that we've got this ceiling price right there at 232. The market's hit it a couple of times. Tried to get a breakout there and that failed. And since that time, we've come back up to the resistance. It needs to break through. So for now, again, it's a hold. I would not short the stock. I would not buy the stock. I think it's something to watch. Now, keep in mind, this is just my opinion. I'm doing this for educational purposes. It's not meant to be investment advice. Do your own due diligence, all that good stuff. All right, now we're on to Microsoft. MSFT is the symbol. You can see the stock scores are 49. That's sort of a neutral rating. And the reason it's below that critical 60 point is because the upward trend line was broken. And you can see in doing so, the optimism was broken. You know, we had this rising bottoms there, and there was another one, and then we broke that cycle of rising bottoms. So I think Microsoft in the longer term is actually best avoided. And the reason that I'm concerned is we've built this falling top here. And if we were to break this upward trend line from a falling top, that would be a sell signal. If we go to the 3-year weekly, this becomes a little bit easier to see because that long-term upward trend was broken. We're now building a falling top, and that could lead to a rollover. Hasn't broken down yet, so I'm not going to give it a hard negative signal yet, but I would be cautious. Now let's dive into the short-term chart here, the 60-minute. And there you see, again, pessimism building, pessimism being falling tops. We had rising bottoms for a couple of weeks. We broke that cycle. We're now in a cycle of falling tops with support here at around 428, 427. If we break down through that, we're heading lower most likely. All right, moving along to the next of the Magnificent Seven, NVIDIA, NVDA. And NVIDIA has been a bit of a parking lot over the last 3 months. If you'll recall, I put a sell rating on the stock there when it was making what's called a bursting bubble candle. We had this parabolic upward trend, hit a new high, closed below the open. To me, that was the topping signal. Earnings came out in here, and I was cautious around that earnings announcement simply because when markets rally into earnings, they usually get a little bit stuck. The critical thing for NVIDIA is this downward trend line right there. This is drawn across these falling tops, and you can see that this week we hit that point and got stuck. Now it's actually not a negative pattern because we also have rising bottoms. So this is something called a pennant. And a pennant is essentially compression of volatility. You can see that the waves up and down are getting tighter and tighter. And what that means is that investors are getting more confident about what NVIDIA is worth. The volatility is diminishing. And what we look for as a buy signal in this situation is for a break from the tip of the pennant. Is it going to be up or down? Well, actually, given that the trend into the pennant was up, it's more likely that we'll get a break to the upside. However, until we get that break, I would not be a buyer of NVIDIA. If you are long of the stock, I would say it is a hold. And if instead we break down through this floor price, then I would be cautious with it. I think it would be more likely to go lower than higher. Here's the 3-year chart. And again, you can see this parabolic trend. Anytime trends go parabolic, they get the bursting bubble, which is a strong candle hitting a new high, but closing red, meaning it closed below the open for the week. And that was that sell signal that I talked about back then. If you go back to the Stockscores YouTube channel videos, you'll see that video on that particular time there. Now we've got these falling tops. We still have rising bottoms. So the critical thing is, do we break up or down from this pattern? All right, moving along, let's take a look at Alphabet, which I still like to call Google. And there you can see that the cycle of rising bottoms was broken, and we are now in a cycle of falling tops. And so to me, this is a stock best avoided. I think if we start to move down through this floor, there's a trade there for a move to the downside. We can see that more clearly on the 1 month chart. Here is the 2-hour chart, and you can see that there's this cycle of falling tops. It's okay, the last 2 weeks it's been hanging in there, but because it's at this resistance zone, if we see it break down from this, then I think we're going lower, and I think that's probably the trade. I don't see a good reason to be on the buy side, at least not yet, because we are still in this cycle of downward trend. Now, to its credit, Alphabet is right at that long-term upward trend line, so it should hold there, but I just don't see great upside if it does. I think it's probably just going to go sideways for a little while. If you're a very short-term trader, you can take advantage of the swings, but as a longer-term investor, I think it's best avoided. All right, let's try Amazon next. And again, we're going through the Magnificent 7 stocks. If you're enjoying this video, please click on the subscribe button, like it, and leave a comment on your thoughts of some of these stocks. Here we have the Amazon chart. This is the daily chart, and it's a difficult one to read because there's a lot of volatility on the daily time frame. What we like to see is a compression of volatility and then a break, or a stock in an upward trend that pulls back and then breaks. We don't have either of those things here. It's just a market that's sort of choppy and moving all over the place. It's come up to near resistance and started to roll over at the end of the week last week. Not a terrible signal yet because the upward trend line is still intact on the daily. Let's dive into the shorter term chart. We'll look at a 1 month, 60 minute. And there you can see that end of day weakness that a lot of stocks showed. And we have this upward trend line still intact. But if we were to make a falling top and then break down through that from a trader standpoint, I think that that would be a short. If we think about the long-term, more investor-focused time frame, much like Alphabet, it's holding that upward trend line. It's really just looking like it wants to go into a sideways pattern, build a base. I think it's going to be a little bit dead money for the long-term investor for now. All right, a couple more to go. We're going to look at Meta, META, Facebook, and there we can see the breakout from rising bottoms about 2 weeks ago, a week and a half ago. That's a real positive signal for this stock to go higher on the daily time frame. You can see the stock scores have gone positive. If we go into the 3-year weekly time frame, you can again see the upward momentum. Built a sideways range for the better part of almost a year, and now starting to break out there. I think this stock more likely to go higher than lower. What about for the trader? Let's dive into that 1 month, 60 minute chart. And the opportunity there as a buyer was right here when it broke through resistance from that first rising bottom. This is what I call a bottom fishing pattern. Now at that point, the only weakness was that it was at this level of resistance, which held up for a day and a half. And then we got a breakout right there on, I believe that was the 19th of September. And that was your cue to maybe go on the long side with Meta. All right, finally is Tesla. And Tesla is another stock that's been doing really well lately. If we look at the 1 month, 60 minute time frame, the buying opportunity was about a week and a half ago when we had this break from an ascending triangle right here. Stock scores are obviously in good place. Upward trend, now I think it's a hold and something to consider on a pullback. So if you see this stock have a little pullback, not more than 50% of this gain, if it pulls back about half and then breaks the pullback, that would be a trader's buying opportunity. For the longer term investor, it is limited in upside to this ceiling price here between $280 and $300. It does also have some resistance here at $260. That's why I think we may see a short-term pullback and then make another stab at moving higher. So for the longer term investor, kind of a hold. For the short-term trader, it was a buy a week and a half ago. Now it's a hold, but the possibility of a buy later. If you want to continue to use the Stockscores website, a lot of these things to use are free. You can enter in the symbol of any chart you want. Just do it in the upper left-hand box there and bring up that chart. You can see the stock scores. And the other thing that I recommend is I have a free weekly newsletter email that comes out. You just click on this See More link right here on the homepage, register for that. It's entirely free. I give my trading tactics, stock picks, and that sort of thing. The last thing I'll advertise is that I've got a number of free 1-hour lessons coming up. These are live sessions where you can ask questions, and those are the links there again in the upcoming events section of the homepage. Free to attend, and that's coming up middle of October. Well, I hope you've enjoyed this little analysis of the Magnificent Seven. If so, click the like button, make sure you're subscribed, and as always, trade well.